Hi, Ron. Excuse me. It's Stuart here. Welcome to our midweek roundup. It's where are we? It's about 1:30. Oh no, it isn't. Yeah, 1:30 in New York. It's 6:30 here in London. I've been out most of the day at an expo. Relatively interesting chat, but more on that over the next few days. Main news today was actually this morning from the UK, the CPI data, a bit hotter than expected. It was 1.7 last month. It's come in at 2.3%. It was expected to go to 2.2%. Obviously, it was somewhat expected that we were going to have this rise, but it's a bit hotter than expected. The core is also hotter than expected. It's what we've been talking about for the best part of 2 years now, about the stickiness of inflation. In the UK, we've had some strong earnings settlements particularly in the public sector. That's yet to really feed through, but it's really although energy costs and food costs have come down, there's still a bit of stickiness, particularly in the services sector. And we've been talking again, as I say, best part of 2 months. The other big news was PPI, the Producer Price Index. Out of Germany was also much hotter than expected. And since then, we've had lots of chat from many central bankers. Top of the shop was Miss Lagarde and some members of the ECB, the Bank of England as well. And inventories were oil inventories were a wee bit hotter than expected, worse than expected. So that's not really moved the oil market that much, to be honest. It's been a stronger day for the US dollar. Let me just go back to the calendar. So that's today. Tomorrow, Thursday, after market tonight, Nvidia report their earnings as well. So that's holding stock markets up a bit as well. But we'll have a look at the charts in a minute. As ever, if you've got anything, any particular asset you want me to have a look at, please let me know. Stick it in the chat box and we'll have a look at it together. I know we've been looking at gold and we continue to move high for gold. Those levels we talked about early in the week have all been hit. Well, not all of them been hit, but we're certainly on moving higher, even though the dollar's come back a wee bit today. So tomorrow, Thursday, another big day. Lots of chat again from central bankers. The vice chair of the Fed speaks later on today. Later on tomorrow, assistant RBA governor overnight as well from Australia. Philly Fed initial job claims tomorrow, and some more home data that's been coming out all week as well out of the US. The key main data points tomorrow. So 1:30 GMT tomorrow. Big data dump from the US. And the home sales comes out an hour or so later after that. So again, not a great deal of data this week, and so really we're waiting for the PMI data, which starts tomorrow as well, and the US PMI data on Friday. So Friday's going to be key day as well for that. So just back to today, let's say it was UK inflation was hotter than expected. Crude inventories were a bit higher than expected, and the chatter from the central bankers continues to fall in line with expectations. I.e., the ECB are continuing to cut. It's question marks over the Bank of England. The Fed remain questionable whether they'll move again in December ahead of the new president taking up the reins. Some more appointments today as well from the president-elect. But anyway, let's have a look at the charts. So let's just bring in everyone's favorite one we've been talking about all week, and let's just get rid of that. Let's move that up so we've got the chart a wee bit bigger. I'll get rid of the order panel. We don't need that anymore, and we'll just leave the markets panel up so we can see what's going on. So this is the hourly chart for the gold market. If I just go back to the, I need to do that. I need to get rid of that. If we just go back to the daily time frame, actually, we see those levels we put on last week, and I actually put them on the chart this week. Now we talked about them last week. These key levels to the downside. There's 520, 2520, 2560, and this psychological, hugely significant 2600, which we burst through earlier in the week. here on Monday. Big strong day on Monday. We followed through yesterday, with less emphasis. We stalled at this first fib. Let me just take that fib level off actually. Remove those drawings. There we are. I didn't mean to take all those off, but never mind. Anyway, let me just put that key 2600 on that we were talking about. So 2600 was a key level that we've been playing with, and we burst through it strongly here on Monday. We followed through here, as I said, on Thursday, yesterday, and we're having a strong day today. So 2647 is the level we currently trade at, with 2660 being a key level, and then 2675. My colleague Da Costa, he was looking at 2690 to the upside. So we've had a strong week so far for gold, and I say we followed through on gold today, even though we've had the euros, sorry, the dollar has come back a wee bit. If we look at the hourly chart today, we see this last move high was here at the 3 o'clock my time here. You can see that that cross there of the MACD signal, MACD and line, the signal line. The parabolic star flipped the hour before, and we were long here on the hourly chart at 26.43 again on the hourly basis, looking for 26.60. We got to 26.55 before we rolled over a wee bit, but that's still positive to the upside for gold today. So as you can see here, if we roll this back up to, if we roll this up to the 4-hour time frame, to the hourly time frame, you can see what a strong week we've had through the 2600 level, and next there's that next cluster there at 2740. So 2660 is the next in line here. 2660 is the next line to the upside. So gold continues to be bid, and it continues to have a good week so far. Over on the forex markets, and this is any other indices anybody wants to have a look at. Let me just check. No. Over on the forex market, say it's been a stronger day for the dollar. If we look at the euro and the pound in particular, euro. Let me just bring that up. There we are. Euro. So oops, let me just set that. There we are. So we got to 106 today. Excuse me. We got to 106 today earlier on, but we've been declining all day. There we are. So we topped here at 106.10, just above the 106, the big round 106 level, but we've been declining all day. So again, early trades in as Europe opened this morning was a sell for euro dollar, and that's continued all day. Big leg down here at 2 o'clock. And we spiked to the 105 level yet again. 105.06 was our low today before we bounced up, but the hourly chart still remains short, and that up candle here in the last hour may show signs of moving higher. But as you can see here, we've been lower than our hourly candle from yesterday. We're lower than our hourly candle from the 15th, and this next low was here. We're also lower than that, and that will take us back to the 14th. So it's been a I'll zoom this in. It's been a weak day for euro. Our next low takes us back to the 14th, earlier on in the day at 104.95. Remember when we brought that hugely psychological 105? So it's been a weak day for the euro again. And the trend to the downside continues, even though we'd had that tick up. So if we look at the daily time frame into this breaking the 105 level last week, we've had a tick up towards the end of the week, beginning of the week, but we've had a sell-off today so far. Obviously, today's candle isn't complete, but again, if you look at the size of the candle, it's quite significant, and it's to the downside. So the 2-day rally has been sort of spat out. So the dollar strengthening a wee bit, or continuing to strengthen, having sort of weakened over the last couple of days. So the midweek is we're back to where we were at the end of last week, basically. So as a midweek roundup, we're back to where we were as we closed out Friday. So 105 is very much in play again for euro dollar trades. And you see here on the daily time frame that the MACD signal and signal line and MACD line have been sort of looping lower. So 1012 here. Back at the beginning of October where we were, but we've been looping lower ever since, haven't we? So we looped down, big leg down, retrace was much weaker than the leg down, and then a big sell-off, obviously post-election, but it's followed through, hasn't it? We followed through, and the dollar's gaining strength. So again, chatter of parity since Trump's re-election, but big stall at 105 as you might expect. So just watch that line. If it breaks, it could break significantly. We could continue to unwind, but at the moment it's providing some sort of support. So 1, 2, 3, 4, 5. Today's our 6th day testing the key 105 level. Will it go? Keep watching it, guys. The 2-day rally Monday, Tuesday looks like it's over. We've got a big engulfing candle today. See it. Be interesting to see how that finishes tonight as well, because that'd be really interesting if we get this a lower low here from this 6 or 5 days. So we'll see where that goes from here. But yeah, euro dollar trending low on the daily, the hourly, and the 4-hour time frame. Cable. Sterling, so it's pound against the dollar here again on the daily time frame. Similar pattern here. 2 up days on Monday, Tuesday, but we're a down day today. It's not as significant as the euro setup, as you can see here. The close on Friday took us to 126.07, so just above 126. Obviously, 105 euro is much more significant than 126 cable, but the other one for the big psychological one for cable is 125. So sterling a wee bit stronger, you would argue, than the euro against the dollar, but a similar pattern. The strength of the move down is weaker than the euro, but the significance is still there. You can see that looping movement in the MACD and the signal line again. So down, consolidation down here, this longer run down here through October, the leg down after the election, and then we're flattening in here. So instead of a 6-day bottom here, we've got a 4 or 5-day bottom here at 126.07, so just above the 126 level. But again, a down day today at the moment, not as engulfing as the other two. So again, the trend, the higher time frame trend continues. So dollar up against the euro and sterling, and very much against the weaker yen as well. Let me just take that. Just remove that one. So let's just remove that fib level here. So it's the reverse here, obviously, because we've got dollar yen this way around, not euro dollar and the pound yen. So the pattern is inverse, it stand on its head, but you can see similar sort of waves, but flipped. Okay, so we're flipping and flat here on the MACD signal line. So we've moved significant, and that's why. So the down day we had on Friday, big significant down day for dollar yen on Friday has been flipped, and we've turned around yesterday, and we're up again today at 155 being held. So the support area for this pair is the 154.00 level. So you can see that level there, and again, it's a resistance on this level up, tested and then brought back down, and now it's this week finding key support 154 round number, 153.80 I'd say, as a low 20 pip low. But what we'd like to see is obviously this big down candle getting taken out if we're going to go to the upside again. The Parabox chart, interestingly, has flipped again yesterday to the upside, so it's negative on the follow through from this big down candle, and the MACD and the signal line are flattening out, sort of crisscrossed twice. So it's not sure. See how small the movement is, although negative, how small the histogram is here compared to the size of the histogram as we're in a strong trend. So it looks like we're topping out between 154, 155, could be the interpretation of that. But at the moment, there's still here on this daily time frame, it's still sort of up trending, and we're sort of balancing out at these round numbers. So the high we got to last week was 156.75, with 154 our big support area. So there's a bit of a sort of channel forming here for dollar yen. Different story to the euro and the sterling crosses. CAD continued to move higher last week, and we've retraced this week. Again, we were down quite significant on Monday. We're down again yesterday, having rejected the 141 and back under 140 as well. So quite a strong 2-day move down, but we've bounced today. But again, you'd like to see that moving a bit higher if this uptrend is going to continue. Here we had a trigger to the short side here on the MACD, this flattening out at the top, a bit like the yen. But we've got an up day today so far, and the parabolic SAR hasn't flipped yet to the upside. So 141 proved a bit of a leg too far. You can see that was an intraday high. We got a bit of a tweezer top there on this rally, so we might have a follow through. We had a strong follow through yesterday. We've retraced again today, so we might have another run down to this 138.80 level, which was proving resistance on the way up, as you can see here. During the end part of October, and that intraday high, we'd got that spike high, which proved a high at the beginning of the summer on the 5th of August. Runs through there as well at 139.50. Okay, so 139.50 is a support area. Then a lower takes us to this 138. No, 139 level. Sorry, I was talking 138 now, wasn't I? Let me correct myself. So 139 is this whole round number here, which is the next big round number. But before that, we got 139.50. So 50 pips, which is where we're finding that support, which corresponds to this intraday spike we saw back in August. So running out of steam, potentially at 141, but still biased to the upside for dollar CAD. Let's have a look at we looked at gold, didn't we? And the metals, we looked at gold, and let's have a look at the indices. So the S&P 500, just as we came, I guess the daily, again, sort of rolled over, and we've been down, we're cooling quite significantly. But we look at the intraday stuff, so the 44,000 level couldn't be held for the Dow. So far today, let me just reset this. Let's reset. The last signal we had here on to the downside was here again this afternoon, and that's was out of the money. Now it's back in the money. That's still trending low. You can see on the flip there. The MACD crossed first before the parabolic SAR flip, so we got short here at 43.2500. Nasdaq was. Do I have a look at the Nasdaq? I think I did do the Nasdaq. Do I not do the Nasdaq? What a daily? No, I haven't. But Nasdaq, similar setup again. The parabolic SAR flipping here at 10 o'clock this morning. And actually, that was, yeah. So I went against us initially, but if I did stop loss too close, you'd have been stopped out of that. But again, that one's in the money. We were down today. I said obviously Nvidia's had a remarkable run. It's heavily weighted within the indices, so everybody's still actually holding the breath for what the data actually shows later on tonight. But yeah, Nasdaq down as well today from that trigger there this morning, and still short, struggling to move under 20,500 Nasdaq 100. But again, if we just tick this back up to the daily time frame, it's still relatively well bid, although I say the parabolic SARs have flipped here in the last few days, and we've had this cross. That was the intraday cross, wasn't it? But interesting, it was a down on the daily time frame as well on the 15th, which is still out of the money actually, because it's we got in here and it's gone against us here on the daily time frame. But it's still valid, it's still playing out. The stop loss will be just above here through here. not necessarily the all-time high, but just through here at 21,100. But the intraday is short, and that one is in the money. Dollar index itself, 106.60 at the moment. Let me just remove. Actually, I'll leave that on that leg we had, that leg up, and see if it was retracing. It doesn't really want to, does it? So the 106, the 107 level we were trying to get to initially, we didn't quite get to, but again, as I said, today we've had a strong day today, and we're up at 106.65, so it's the best day for a while for the dollar index. Strong from this morning, basically it's based through here at 106.10, but that's really the target, the new not all-time high, but the new recent high. As we went to 107, it's rolled over in the last hour, but we're still, if we zoom in, we were looking at this, weren't we, this downtrend which we've burst today. So it was looping lower. We had a break up. So if this holds tonight above this this down line here on the this hourly chart, that's looking relatively positive again for the dollar, and we could see another attack of 107 for the dollar index. Obviously, that's been I can say not many of you trade dollar index. I don't trade it particularly, but as the impact, or the significant impact, is the fact that remember, it's made of 6 key currency pairs that create the dollar index, and the euro dollar accounts for over 56% of that weighting. So the weakness we've seen in the euro getting to the 105 level again, and the weakness in sterling has impacted that quite significantly, which is why the dollar index has had such a good day today, corresponding with a weak day for sterling and a weak day for the euro, and less so for the yen. The yen's been it was a pretty bad start to the day, but it's come back a wee bit. So dollar index 106.65. It looks like it's topped for the day at 106.86. But don't rule out that 107 as we continue into tomorrow, and obviously Friday's PMI day, but we'll have a look at that as the day runs through. So it's back as we were at the end of last week, really, as a midweek roundup. The index is, let's just put me back on the S&P 500. They've sort of cooled somewhat this week. That was Friday's down, quite a significant sell-off last week. We sort of cooled and consolidating a wee bit. Again, another one that's at a key level. See, we're currently today another down candle, but it's back to the resistance at the 5,885 level, which is the resistance resistance area we first ran into the beginning of October, and then weakened, peak up, and now we've rolled over. So we'll see how that we'll see how all that pans out as we round the week up. But 85,885 key for S&P 500. So as I say, as a midweek roundup, it's really the dollar's back on the front foot. Yields have ticked back up, having still over 4% on the 10-year, and indexes have cooled. And gold continues to rise. And let me just leave you with gold. I know it's the one that most of you trade, and we're at 2648, 2650. You know, we've been over already today, and so we're up for 3 days consecutively now. The intraday move has been good, so it's a good week so far from that gap up on Monday morning through the 2600 level, and we continue to move high to those levels we talked about. The 2631 was the first one we took out. 2660 is the next one. And we'll see if this continues tomorrow and see where we finish today. Are we going to break above the 2650 to close the day out? But it's a good day, another good day for gold traders. And you see here on the daily basis, this is still short here, the parabolic SAR, but interestingly today we've seen a flip of the parabolic SAR so far. Obviously, you can't, as an end of day trader, you've got to wait till the candle closes. Patience is key. So the parabolic SAR has flipped, and the MACD signal line are coming towards one another, looking for a cross. So perhaps maybe we see a cross Friday into close. We shall see. Will we target the 2700 level again? Again, only time will tell, but it's been a good week so far for gold. So may the pitch with you as ever, my friends. We'll see you all tomorrow morning for a busier day tomorrow, some key data, and then Friday with the big data dump from the US. So take